we're going to discuss some tax savings ideas that you can implement for you, especially for you as an entrepreneur. It's really what I'm going to focus on. That's really what I'm focused on in my life as well. So before I start, please, I'm seeing there's a lot of people watching. Let me know where you're watching from. If you're watching, just shout out, just give me a thumbs up. Give me some motivation. And I've got a list of about 4 or 5 things I want to discuss with you and go through with you. But more importantly, I want to know what you want to ask me. So I've got a few ideas and a few things listed on the talk today. But more importantly, I want you to ask questions. I'm going to have a Q&A at the end as well and keep it open. So today is about you and how we can save tax for your company. So thank you very much, everybody that's here. I just want to see if there's anybody that's already doing some comments. Just give me 1 second. And hi, Russell. Thank you for watching. So today, like I said, all about paying less tax. And I thought good to actually take, whenever I get a new client, there's certain things that I run through them. It's almost like a financial health assessment that I do with all our clients, whether they're a company or a small sole proprietor. And I thought, well, let's use some of those ideas. Let me give you some of those ideas, and whatever I give to a first client that I meet online or on Zoom, and these are the things that I would discuss with them. Thank you for watching. Just a quick reminder to grab your gift pack for entrepreneurs in the link below. It's a gift pack for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that gift pack for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. All you need to do is activate the gift pack voucher in the link below, and we will be in contact with you as soon as you've done that. I know a number of our monthly accounting clients also received the message and also seemed very excited to be on this call. So, right, so one of the very first things that I would discuss with at least assess with the new client, is the status of a small business corporation. So just some ideas and some requirements around small business corporation. But to be a small business corporation, it's not something apart from a company or closed corporation. It's something that can be implemented or be activated on your tax return when you submit your income tax return for either a private company or your closed corporation. So those are 2 entities that you can use for a small business corporation. So it's not a separate registration. It's almost as a click on the income tax return. And very importantly, now I will show you the calculations and the actual tax difference between a small business corporation as such and in a company or the normal corporate income tax rate that's at 28%. So, but before we get to the calculation, let's just go through the actual requirements that you need to be able to be a small business corporation, or at least your company. So your turnover needs to be less than 20 million Rand per annum. That's very important. And then none of the shareholders or members in the case of a CC may hold any other shares in any other company or CC, obviously an active company. And they must be all individuals. So you can't have a company that, or like me say the other way around, you can't have a trust that holds the shares in your company, obviously for estate duty and all other risk kind of reasons. You need to be an individual holding the shares, and you may not have any other shares in any other company. And any other company means a private company or closed corporation. It's not a listed company. So if you hold any listed shares like JSE shares, those kind of things, you can still qualify. At least your business, your company or your closed corporation can still qualify for a small business corporation. There's only 2 exceptions on this rule, and that is if you if you are a director or shareholder or member of another company, um, and that company is actually dormant with assets less than 5,000 rand, then you can still be, the company can still be classified as a small business corporation. And also, if you have a company that's currently in the process of deregistration or in the process of winding down, like a liquidation, etc., then you can also um, still be a small business corporation. So I think those are two very important points. And then the third point is also very important. You might not, the company's income might not be more than 20% in the form of investment income or personal services. And I think that's very important. And also personal services is very important to understand that it can be anything like accounting, auditing, or, architect, IT services, um, uh, company that trade in property, whether it's rental income or trading in flipping, buying and flipping property. All of them are personal services or investment income. So there's quite a number of exclusions. And but there is, luckily, and I haven't included on the slide, but it's very important that if you are a company and your income, more than 20% of your income comes from personal services, if you employ more than three non-connected parties, so it can't be your wife or your husband or your brother or sister, um, or kids, or even a bit further to that, very closely related family members. Um, if you employ more than three or more of these non-connected parties, then you can still be a small business corporation, even though this may be applicable for the personal services. So very important to that as well. So thank you very much. I see there's a few more people watching. Like I said in the beginning, please, if there's any questions, I'm going to have a Q&A at the end as well. So I'm going to run through a few ideas, and then I'll be getting back to you, and we can have a nice discussion on the Q&A as well. So now that we established that you potentially can be a small business corporation, let's go look at the actual tax calculation and the tax advantage. I think that's the most important part of this because today's topic is less tax. So let's quickly look at the company of this morning. Actually, done it. Let me just open it quickly for us here. So this morning I've opened up just a small business corporation, Pty Limited, with all kinds of turnover, which we can see here is less than 20 million, it's 12 million. So that's the very first idea or the very first requirement. And then the shareholders, like I mentioned, don't have any interest in any other private companies. And then I've done a calculation for us based on the taxable income. So this company's taxable income for February 2020 was 354,000 rand. And if you were, if you didn't qualify for a small business corporation, then your tax would actually be almost 100,000 rand, 28% of the taxable income of 354,000. But in this case, because we could, all the requirements has been met, and it's actually a small business corporation, the tax levels are a lot lower. So it's actually up to the first 78,000 rand. There's no tax. The first 78,000 net profit, there's no tax. And then up to 315,000 rand, it's only 7%. And then to a scale of 550,000, which is the highest scale, you only pay 21%. So anything above that, you will actually pay 28%. So that makes a massive difference in the tax. So you will see on right here, income tax at the small business corporation tax is 19,000 rand, and the normal corporate tax would have been 99,000 rand. So the income tax saving is almost 80,000 rand, just merely because you could verify that you're a small business corporation, and you could, in truth, obviously, confirm that on your income tax return. So this is something I really do with each and every client. As the very first meeting that we have, that's almost the very first thing I do if they're a company or closed corporation. I assess that part because that is very important, and to make sure that the client pay obviously little as little as possible income tax. So I'll just write here as well, the saving is applicable to 550, so that's the highest scale. Anything above 550 would be taxed at 28% of the net profit. Just also a very important point on this is the net profit calculated here is after the director or the member actually receive the salary as well. So this is after everything. So after this tax, if the director want to distribute the dividend or additional bonus, then you can potentially look at obviously declaring it after this tax. But the, the director actually received the salary already from this, so it's already been deducted from this income tax. I just want to see if there's anything else on there. This is only the calculation. Yeah, right. So that is basically it regarding small business corporation. But again, very important saving right from the start. A very important thing to look at um, for any new client that's coming up. Right. So then the second thing I always look at, especially if the client do have a lot of employees, is the employment tax incentive. And again, massive tax saver for especially for small business owners. Um, that if you just start as well and you needed to start to employ a few people, um, you can actually get a massive tax saving from the employment tax incentive, or in short, the ETI. So again, let's first look at the requirements, and if you can actually identify that in your business, it's a serious thing to consider to implement in your tax. This is actually part of the pay as you earn. So all this calculation, which I will also explain in a moment, um, will always be declared on your pay as you earn return, on your monthly pay as you earn return, your MP201, that you declare declare and pay on the 7th of every month. Right. So the very important for employers are that they need to be tax compliant. I think that's we've seen through all the debt relief funds as well as we've done. Employers always need to be tax compliant. This is very important, and it's a continuous basis. So it's not tax compliant that's previously, like previous years or a few years back, you used to get a tax clearance certificate, which was valid for 12 months. But these days, it's a continuous system that look at your compliance status. So you can be compliant today, but if you don't submit your income tax or provisional tax or any zero return for that matter, you won't be compliant. So that's very important for the employer itself. The employees is working between a scale of ages between 19 and 29. Salaries must be between 2,000 or 6.5. Well, in this case, in most cases, the minimum loan or minimum wage are 2,500 rand. So, but the salary need to be between the 2,000 rand and 6,500 rand, and the employee must have a valid ID. So, very important, can't be old employees. It must be the new employees that you, especially in new business that you just employed, you can actually get the benefit from them. The benefit works as follows. It's a tax incentive for over a two-year period where you receive the full benefit in the first year and only the half of the benefit in the second year. And on average, you receive roughly 1,000 rand per employee in an actual tax incentive. So how would it work? You have 3 employees that both qualify for ETI, and let's say both all 3 of them do have 1,000 rand um, deduction that you can make for them. So then you have basically 1,000 rand times 3 employees, 3,000. It's a 3,000 rand pay as you earn incentive that you receive as a credit for that month. So if you had to pay on all your various employees pay as you earn of, let's call it 10,000 rand, then before you pay over the 10,000 rand to SARS, you can actually deduct the 3,000 rand SARS ETIs from that amount, and you actually only pay over SARS 7,000 rand. So on the one end, you deducted the pay as you earn from the employee, and obviously pay them the net amount. And at the other end of the 7th of the month, that pays you in that you've deducted from them, you need to pay over to SARS, but you can deduct these ETIs, employment tax incentives. You can deduct that from that pays you earn that you've deducted from the employees. So very great benefit, and I've seen a lot of our clients receive a lot of ETIs back, at least in the form of saving. Not necessarily that you receive the actual ETIs back in your pocket, in the sense of actual cash, but the net effect, that amounts that you actually receive from pay as you earn, and the net effect from the tax credits, in effect, you actually receive the money every month on the 7th. So that's a very, very important point. So these first 2 points are, in my opinion, the 2 crucial items that I need to discuss with each client um, right in the first meeting that we have. Huge tax savings from the start go, and surprisingly enough, a lot of people don't know this. We also always assume, especially as accountants, we always assume that the client do know the employment tax incentives, and they do know the small business corporation and the benefits of that. But rarely, when I meet with clients, I actually know about that. And so very important from my side always to do that. Small business corporation, make sure the requirements are met and make sure they are actually getting a benefit on their tax return, and also the employment tax incentives, very important. Right, so the next thing is something smaller, but it's also worth mentioning, especially these days when a lot of people actually work remotely. So this is not, today is all about entrepreneurs, and the content is for entrepreneurs, but there are also, SARS also issued now something that you could always do, but obviously with everybody working remotely now, you can, if you're an employee and you work from home remotely, you can also use this office expense as a deduction in your income tax return for next year, 2021. But in this case, my focus is on entrepreneurs and how they can deduct home office expenses as well. So very important that the calculations are very strict on how you need to do that. You need to calculate the business square meters of your total house, and obviously also the total square meters of the house, to get a pro rata kind of a calculation that you can do. And that business portion of the business square meters to the total square meters must be exclusively used. And that's very important. It must be exclusively used for business. So a lot of people would argue, I meet with my clients in my dining room, and therefore I need to be able to deduct it. Or I show them presentations or slides on my television, and I want to claim my whole living room. So it's very important that if you have a study or if you have a room in your house, that you only use that portion. Normally, I suggest to clients it can't really be more than 20%. 20% is more or less the average and the rate to go on home office expenses. And then obviously again, you can do this calculation. I will actually show you the calculation just now, but you can do it on two different ways. So either you own a home or you rent a home. So if you rent a home, the calculation is very easy because you would work according to your rent paid. If you own a home, you will work according to your finance charges that's on your bond. So it's not your bond repayment, but your actual finance charges on your bond. But I'm listening here, beware, because the day that you sell your home, you get your personal residence home, you get a capital gains rebate of 2 million rand in the capital gains tax and capital gains that you actually make. When you use this formula of home office expense, that portion of the business square meters need to be deducted and reversed on that 2 million rand rebate. So there's something to be aware of as well. It might be great in the short term to actually deduct the home office expenses, but in the long run, with the deduction for the capital gains tax, it might negatively influence you. So just discuss that with your accountant before you want to do that. But let's look at the calculation. I've done a calculation for us. So in this case, I've just tried to list as much as possible of the ideas that I could think of. In my example, I use the rent paid. So if you own a property, you won't use the rent paid, obviously, but you would use the finance charges that you get from your bond. Right. So typical ideas for home office expenses: guardian services, insurance, levies. If you're in a kind of a body corporate environment or property, rates and taxes, rent paid, and then security. And then you would from there get a total, add back according to your business portion, so your square meters to the total square meters. And that 93,000 is actually the amount that you will get as a deduction in your income tax return. I think that is pretty clear. And just want to quickly mention, thank you everybody for watching. I see Ria Lars, one of our fans, are also watching. Hi Ria, thank you for watching. Just give me a wave, give me some inspiration. Um, and then the last thing that I've got on my list before I go to Q&A, because I really want to go to Q&A, and hopefully a lot of people would ask some questions regarding the tax, because I think that's more important than me rambling and going on about a few ideas. So I think more importantly, let's get through the last one, and then I'm going to open it up and give you some time for Q&A if there's anything that you want to ask, or even just give me a comment. Just give me some ideas. And right, so the last thing, and that's again, it's very important for employees with the travel allowance as well. If you're sole proprietor, entrepreneur, and sole proprietorship, very important, because SARS really all sole proprietors a lot currently. They grind, really grind them, and I can't see that we'll get any better getting out of lockdown. So very important, a few ideas regarding a logbook. Um, Most people, when I ask them, do you have a logbook, they would tell me yes. And then when I ask them to start explaining to me um, what's in their logbook, they would tell me every time I put in some petrol, I write down in the book the amount that I've put into the vehicle. That is not what SARS looking at. SARS want a proper logbook with, you will see every single day. Um, they want every single day and every single trip. So you will see in my example, there's November 20, 20 November, there was some private kilometers. Then the next day there was some private kilometers, and then the next day this client came to Dryk Holdings, the accountant, the US of Flactor, and they drove that amount of kilometers. On the same day, they also drove some private kilometers that they also listed. So it's important that you list every single day, but also every single trip in that specific day. So, and then further to that, private isn't really that important. So private, you can just list private, but any business trip, you need to state exactly where you've been. In this case, Dryk Holdings, what you're doing at Dryk Holdings is my accountant, and where are they? They're in Nielsen Flutter in Cape Town. So you need to go through each and every person that you visit and really log that. So I would suggest any person doing that to really log your logbook, and maybe rather get something like an e-logbook. There's e-loggers and all kinds of things. Real Lars is also on here. They own a company, Secure Track, and part of their system, they can also assist you with tracking your kilometers, and obviously mapping the locations as well. So very might be a good idea to be in contact with us, and maybe us to locate you to Rihanna as well. But I can't stress this enough. You can't deduct any expenses regarding your vehicle, depreciation, interest on the hire purchase, fuel, repairs, maintenance, insurance, licenses, whatever else there might be on your vehicle. You can't claim any of those expenses if you don't have a proper logbook. And SARS are really focusing on these logbooks, and that's one of the biggest items that they, on a constant basis, throw out on an assessment, and or at least write back, whatever you want to call it. So, very important. This logbook need to be so detailed that you will almost get nightmares when you actually do that. So, um, I think my time is up regarding my presentation. There's just four ideas that I think it's very important to look at. The very first two, if you only joined now, small business corporation and ETI, extremely important for me, seeing a new client, to make sure that they get the best potential tax rate that they can have for the company. Um, yeah, Russell and Julie, thank you very much for your question. Are there any benefits of voluntary registering for VAT? So that is a very broad question for me to answer. So I'm going to try to do my best and give it in a few sentences, or a few in a small space of time. But first of all, you have to register when your company have a turnover of 1 million rand. So the moment you know that your company have a turnover of 1 million rand, you have to register. If you don't register and you get to a year, 2 or 3 later on, SARS can actually backdate the registration to the point that they feel that you've been trading with a company that has more than 1 million. So that's your compulsory registration. Your voluntary registration can be done anytime from 50,000 rand turnover per annum and more. Um, and benefits are, if you can, let's use Dryk Holdings as an example. Dryk Holdings accounting fees, a monthly accounting fee, let's call it 1,000 rand. When I'm not registered for VAT, I will charge my client 1,000 rand, and I will pay my suppliers, and whether there's VAT or not, I can't claim that. But once I'm registered, and I add my 15% on top of my 1,000 rand, so it's 1,000 rand plus VAT. Now the client can actually claim back the VAT. You charging the VAT, so you only charge 15%, the 15% on the 1,000 rand. But you are also paying a lot of VAT towards your suppliers, potentially. So once you receive the 15,000 rand from your client, that 15% on 1,000, you can actually deduct the expense, the VAT on the expenses, and you will still pay amount due to SARS, but the net effect again would be actually amount that you save, because you already received the 15% VAT, and you only deduct the expenses. You only give SARS the net difference of that amount. So that is very important. Some of the industries that can't really work like that, is definitely cafes. So the supermarket can't all of a sudden charge, when they charge 100 rand for whatever, for coffee. They can't all of a sudden charge 100 rand plus 15% for that. It's just not that's not possible. So in their case, it's not really viable for them, because they have their sales included of that. So they actually lose the VAT on that. On the other hand, they can obviously claim the VAT on the purchases again. So they do get a benefit of the purchases, but they don't really get a benefit as such in the case of where you will actually charge the VAT additional on your invoice. So VAT is normal. It's never really an expense for you. So if you can, you just always need to make sure that the VAT that you ask need to be on top of your actual price. So if your base price is 1,000 rand that you actually want to have in your pocket, make sure that you ask, send a quotation of 1,000 rand plus VAT. Then all the expenses that you incur, that you can deduct VAT on, will be a benefit for you, and you will receive the results on that. So, Russell, I'm not sure if that answers your question, but in short, that is definitely the benefit you get from there. I also see if there's any other questions. There's no really other questions. If there are any other questions, I will give a few minutes to still hanging on and take some questions. Something that I actually haven't had on the list, and something that I don't really believe in, but retirement annuities can be a very good benefit tax-wise. I try not to advertise RAs at all, but it's a good benefit if you're employee. Great, you don't have potentially don't have any other pension plan for yourself, like an entrepreneur would have a business and potential other interests. So for you, it's a great idea to have potentially pay a RA, and every year you will get, depending on your tax rate, you will actually get the benefit of that in form of a refund. So if we switch the perception of a RA as such, so let's assume you have a RA and you don't have any growth over the period of your lifetime in your RA. So you made zero growth in your RA. You will still, if you take that tax refund that you receive on an annual basis. So let's say your tax rate are currently on 40%. So you're on roughly R1 million income bracket. If you pay on there and you receive 40% of every rand that you put towards the RA, you receive back in tax refund or in tax saving. So when we split our perception on that, you actually receive 40% annual return on that retirement annuity. So if you take that refund or the tax savings and you plow it back into a RA, every year you will actually make 40% on your RA. So again, I'm not a fan of a RA, but I think it's worth mentioning that perspective to any entrepreneur or even any employee that need to contribute to his own pension fund and savings. So that is it from me. I think this doesn't seem to be any more questions from anybody. If you have any questions after this Facebook Live, feel free to send me an inbox. The best place to email me is info@dryk.co.za, and we will definitely be in contact with you and to assist you. If you haven't seen yet, I've also started in the description. I've sent the link on the description for the gift pack for entrepreneurs. It's a gift pack totally free of charge. There's no hidden agenda to that. It's coming from generosity from a lot of various business owners, and 57,000 Rand value. And part of that gift pack is 3 months monthly accounting services of value of 9,000 Rand. And part of that 3 months free monthly accounting services, you get access to a whole the whole practice. So, and we start assisting you on a monthly basis, and we make sure that you are compliant to SARS. Because I mean, face it, if you're not compliant with SARS, you potentially can't get any contracts. You can't do any business with bigger businesses. So very important with that. We will be in contact with you if you want that. You can just complete the form. You can activate the gift pack on that link, and you have access to all those items. Part of this 3 months free monthly accounting service that we offer is also we take you through a whole financial health assessment that we do for your company. Some companies charge 5,500 Rand, even more for that service. We do it absolutely for free as part of 3 months free monthly accounting services to make sure you are compliant in all levels where you need to be compliant. We assess your financial health of the business, and we obviously take it day by day from there and step by step from there. So thank you very much for watching. Hi, Gar. Thank you very much. Thank you for watching all the way from Somerset West. Great to have you on the Facebook Live as well. And I'm over and out. If you have any other questions, please send me an email at info@dryk.co.za, and also remember to log into that link for the free gift back for entrepreneurs that we can activate you for the 3 months free monthly accounting services. Thank you for watching. I'll see you guys next week, Wednesday. Thank you for watching. Just a quick reminder to grab your gift pack for entrepreneurs in the link below. It's a gift pack for entrepreneurs to the value of 57,000 Rand, free of charge. All you need to do is activate it. Part of that gift pack for entrepreneurs is a voucher of 3 months for 3 months free accounting services from a company, Dryk Holdings. all you need to do is activate the gift bag voucher in the link below, and we will be in contact with you as soon as you've done that.